Our next speaker, Mr. Alex Mashinsky, founder and CEO of Celsius, speaking on today's topic, all roads lead to decentralization. Over to you, Mr. Alex.
Thanks so much, and thanks for joining this event. Just a quick background, I'm a serial entrepreneur. Started several companies in the US. One of them was Arbinet, which basically we created voice over IP, which moved the phone infrastructure from traditional telcos to all of us using the internet or using Zoom like we're using today. All these technologies use that infrastructure, and now we're seeing the same migration happening with money over IP or MOIP. So from VoIP to MOIP, and all roads do lead to decentralization. We are moving very quickly there, and I'm going to show you how you can unbank yourself using the blockchain. So really, there's a war going on between centralization and decentralization. We have several hundred years of centralization that's created some of the largest companies in the world. If you look at financial institutions or banks or large companies, they're all structured as a pyramid. You have the people at the bottom of the pyramid kind of creating value and effectively pulling more and more of the profit to the top of the pyramid, and usually 1% or less of the people gets to benefit from all the value created. The beauty in decentralization is that the value is created more in a circle format, meaning everybody has equal opportunity. And because this is a new set of rails, a new infrastructure that's being built from scratch, anyone in the world can come participate and create stuff. That's why you're seeing all of this excitement on the blockchain, because it opens the door for innovation, opens the opportunity for everybody. And it doesn't matter if you're coming from the bottom of the pyramid, you have the same opportunity as the 1%. Now, our currencies, fiat currencies, if you look at the history, the last several hundred years, again and again, you will see an empire, or one empire after the next, losing its dominance because they debased their currency, right? So one empire after the next, most of them were based on the gold standard, but they all lost their dominance because they continuously increased their taxes and debased their currency. And that's what we're seeing right now with the US dollar, which obviously indicates its time is going to come to an end, and it will be replaced by something that has limited supply. And we're betting on Bitcoin as an example of this digital currency that can replace the US dollar. So a lot of people ask me, what is the blockchain? I want to see, what is a public blockchain? And really it is, for me, the analogy is that it's like a tank. It's only good for a few things. Yes, it's safe. It's expensive. It moves very slowly. It's very bulky, and it's only good for a few things. So if you try to use the blockchain for things that it's not good for, you're not going to have good results. It's very important to understand what blockchain is good for and use it properly. This is a chart that shows you all the US banks that had over 100 billion in assets and how they all merged basically into the 4 largest banks in the United States. And in the gray in the background, you see the decrease in the interest that the banks have been paying. So the more they consolidated, the less they paid all of us for our money. And really, there's a whole new generation now that doesn't even know, never lived or experienced a time where money could earn money, right? But just simply by placing deposits. So what the blockchain allows us to do is to bring back yield, right? Bring back yield to life, and that's what Celsius is focused on. We were the first ones to create or invent how to create yield on a blockchain. And today we manage over $20 billion for people in 170 countries worldwide. So obviously a blockchain is very good at running with almost zero fees. You can see Celsius and Bitcoin, the fees compared to traditional banks. These are US banks. And the same thing with lending, right? If you think about the banking model of giving people a credit card, charging them 24%, and only paying them 1% or less for deposits, the bank gets to keep 95% of the value, where in the unbanking model or the blockchain-based model, the customer, the user, gets to keep most of the value, right? Most of the value still is retained by the user if you're using a decentralized service, decentralized lending platforms. So the history of crypto has several steps. One of the big steps was, again, Satoshi Nakamoto inventing the basically Bitcoin, solving the double spend problem, right? And basically handing off the baton to the cypherpunks, to the anarchists who started playing with this and trying to come up with a business model. There weren't enough of them, not enough anarchists in the world, so they basically handed off the baton to the libertarians, and the libertarians tried to make a world a better place using the blockchain, but there weren't enough of those either, right? And you've seen basically 2015 through 2017, mass migration by speculators, right? A lot of people who just said, this thing is going higher, I'm just gonna buy it, and I'm gonna make a lot of money. Some of them made money, but the ones who came late obviously lost money. So we're seeing these migrations again and again, with everybody waiting for institutions to take over, institutions to kind of dominate the crypto space, and it's just now starting to happen. The last 2 years, we've seen really fast adoption, both from the retail space and institution. These are all the different types of players that need to come into a market to make it mature, right? To make it broad enough for mass adoption. And we're seeing more and more of these rings being basically adopted by tier 1 players. So this is a depiction of what happened to the telephone network, right? I mean, we've seen one technology after the next come and eat or eliminate the previous technology. And basically the same thing is now happening with the blockchain. The blockchain is effectively eating up previous networks because some of the world's most powerful computers, the world's largest supercomputer is the Bitcoin network. So, and usually whoever is the largest network, it eats all the other networks, right? Just like the internet became the largest network and kind of ate all the other networks. But for the public blockchain to win, we need to have these decentralized applications. We need to have great token economics, and we need to have a secure and immutable blockchain, because this infrastructure is competing. It's only one horse that competes with 2 other horses, right? One is the CBDC, or central bank digital currencies. So those are coins being issued, or currencies being issued by governments, and they will be competing against the public blockchain, right? Against Bitcoin, Ethereum, and so on. And the third version, or the third horse competing here, is also the corporate version. So if you think of JP Morgan, or you look at what Facebook is trying to do, there are corporate versions also trying to basically convince customers to use their service. So we don't know yet who's going to be the winner, and each person has to decide who you're going to support. Again, blockchain economics, if you think about how economics work inside the blockchain, you look at Ethereum. I use this equation here to depict why Ethereum is so valuable, and really the mass, or the membership, right, times the credit, times how much money is circulating inside the Ethereum infrastructure. And so when you look at any blockchain and you want to value the blockchain, you want to ask yourself, is it a good time to invest or not? This is an example, a good example of a formula you can use to actually value the network. We had several waves of innovation: infrastructure, middleware, and dApps. And right now, basically, the dApps are competing to find new forms or new business model to create new innovation and solutions that replace traditional finance, right? So here we're seeing migration. So money is moving from the old finance traditional banking into the future of finance, which runs on a different set of rails, runs on a different technology, and all that stuff requires tremendous amount of innovation and development. And you're seeing some of the best people in the world kind of migrate into crypto. And one by one, crypto is eating different asset classes. You can see, for example, even the gold, the market is starting to shrink because more and more money is leaving gold and going into crypto, right? So I think there's finally recognition from all the different market segments that crypto is a very important piece of the puzzle, and it's going to continue to grow as it kind of feeds on the other markets. It's also now a maturing industry, so it's not new, it's not at the top of the hype curve, right? So this definitely tells you that it's a safe time to come in and adopt this. And I put this slide together to kind of help people understand what are the steps of evolution here, right? So you see on the top, anarchist, libertarian, we talked about the waves of adoption, but also you need underlying technology. So Bitcoin, Ethereum are underlying technology. And we tried to add security tokens, but really that has not taken off. Almost in no country in the world, security tokens are doing well. And we talked about, again, corporate version, that didn't work out either. But stable coins have definitely created a lot of value. Why? Because again, there's no yield to be found in Asia or Africa or Europe or North America. And a lot of people are basically saying, can I take my fiat currency? I might not want to buy Bitcoin or Ethereum, but can I take my stable coins or my fiat currency and earn yield on that? And that's really part of what crypto solves. That's part of what Celsius solves. We support 13 different stable coins, including Australian dollar, Hong Kong dollar, Canadian dollar, British pounds, US dollar, and so on and so on. And all those earn yield. Right now, the yield, I think, is 8.8%. So that's 20 to 30 times more than the average bank pays for the same money, right? And the reason you can do that is because you can take a real dollar, convert it into a digital dollar, like USDC or USDT, and then that dollar circulates or being used by the digital community and the crypto community much faster, 20 times faster than a regular dollar, a physical dollar, or a dollar that is used by the banking system. And because of that, people are willing to pay more interest to use the digital dollar. I'll just skip a few slides here. So again, if Celsius offers this in a very easy way, you can download an app from your app store, Celsius Network, or you can go to a website, celsius.network, and you can start basically use the service. You must have digital assets already. We don't sell them to you. We just pay yield or give you a loan, very low interest loan, and you can use that asset almost as an alternative to traditional banking. Celsius, I mentioned, has over 20 billion in assets, and we were the first ones to create this business, the yield business, and we do a better job at it than most others. Some other people are trying to solve other problems, but our focus is really on the community, right? Empowering the community and providing more services for them. And Forbes ranked us as a third most I guess third best blockchain, up and coming blockchain. Just keeping a few slides here. So just I want to share with you a few quotes that I think will be helpful for people who are trying to understand what this is. And again, all in the context of going from voice over IP to money over IP. So exchanges today are places where we socialize losses, right? Where service providers like Celsius are socializing profits, right? We basically collect interest or yield from institutions, from exchanges, and make sure that people that use our platform get to benefit from it. Decentralization is a war between toll collectors, right? Banks, financial institutions, and users. The users don't want to pay any of these tolls. They don't want to pay fees. and decentralization effectively brings that capability to them. How do you bring the next 100 million people? You need less volatility and more utility, right? And that's where we are. We are building new utility that, again, bypasses a lot of these toll collectors. Bitcoin today is mainly used for doomsday insurance policy. And stable coins, I mentioned before, are really used for everyday interest. It's a really easy way to make your money, earn money for you. And crypto is here to replace the middleman, right, with middleware. So replacing a person or an institution with software. DeFi, CeFi, if you heard about those terms, all those are effectively replacing traditional finance with software that does all the work and always act in your best interest. So my prediction is that Bitcoin is basically going to replace gold, and Ethereum is going to replace the banks, right? Because one is kind of focused on store of value, and the second one is focused on smart contract transactions, again, taking out the toll collector. So, and a lot of people in the crypto space feel that like living with banks is like living in a bad marriage, right? It's not a fair relationship. We, the people, give banks all of our money. We get charged fees, and we used to get interest. Now we don't even earn interest, right? So we get paid. We have to pay for the bank to keep our money safe. Sorry, which is obviously not a good relationship. I'll just skip a few here. All right, so that's my presentation, and I'm happy to, I don't know if we have time for questions, but I'm happy to answer questions.
Thank you, Alex, for the presentation. Yes, there is one question, and I don't know how he got this question, but I'm quite inquisitive how he got this question. His name is Abdul Gadir Tagaldin, and his question to you is, Celsius terms of use still have Sudan in the list of sanctions country. Any timelines when it will be updated, changed, or we are still sanctioned?
Well, so Celsius is trying to stay compliant in all the jurisdictions where we operate. And if a certain country restricts, we usually don't block all the services. They would block this or that service. They might say, okay, you're not allowed to issue loans, or you cannot accept stable coins in our country. And we basically follow the rules because we want to collaborate with regulators around the world. And we're waiting for terms to be changed. Like, for example, right now, the president of Argentina is thinking of changing how they treat Bitcoin and accepting Bitcoin as a payment mechanism, as an official payment mechanism, right? So things will change. And when they do, we add those capabilities right into the wallet. So, but we do not, I know other people offering effectively services without caring for regulators because they say it's fully decentralized. But Celsius is trying to do it in a way that collaborates with regulators. Okay. So I don't have, the answer is that I don't have a date of when these are going to be open for those countries.
All right. Next question is, so basically you're like a bank where we can take a loan, but can we get interest for our deposits?
Yeah, so our focus, I would say probably 90% of what we do is pay yield on digital assets. So we don't take, you cannot come to, we're not a bank. You cannot come to us and say, here is my dinar, or here is my rupee, or here is my US dollars, right? We don't take fiat currencies. The only thing we accept are digital assets like Bitcoin, Ethereum, stable coins. We have digital gold. If you have Pax Gold or some other gold, we pay yield on that as well. And our job is to help you earn yield so you can basically save for retirement, so you can protect your assets against debasement, inflation, taxation, and so on. and we help you take a loan as well. Why do you need a loan? Because if you sell the asset, you have to immediately pay taxes. But if you borrow against the asset can continue going up in value, hopefully, and you get to not pay taxes immediately. You will pay taxes later, but it saves you. That's how the rich people stay rich. They take loans against their real estate or against their stocks or bonds and so on. So they always defer their taxes. So you can do the same thing by using the Celsius network. And we charge no fees, which is very beneficial, right? There's no origination fee or hidden fees or monthly fee. No Celsian has ever paid Celsius fees. Our job is to create the yield, and we take a small part of it. You get to keep most of it. But if we don't earn any yield, you don't pay any fees.
Okay, another question for you from Mr. Navneet. His question is, what would you recommend a digital asset, Ethereum or anything you recommend?
So we are not an investment advisor. We don't tell you where you should invest, right? We have 42 different assets in the wallet that we support. All these assets earn yield, and you have to decide. Okay, I like stable coins because they're just like fiat currencies, or I like Bitcoin, or I like Ethereum, or whatever, right? And or you can have a little bit of everything, right? And
Correct.
we just manage the asset. We make sure the asset is safe. We lend it out. We do what's called SEC lending, securities lending. But here, instead of securities, we're lending digital assets, and we use those assets to create yield. And again, like I said before, these assets pay anywhere between 6 and 12%, which is obviously, again, 10, 20, 30 times more than your bank pays you. So we are solving one big problem, but we don't do everything else. Like if you need a check, or if you need a credit card or things like that, you can still continue using your financial institution.
All right. One of the questions is, so assuming we have got the digital asset, we deposit it in Celsius, what is the rate of interest or return of interest?
Yeah, so we pay interest every Monday. It compounds on an annual basis. Stable coins pay 8.8%. Bitcoin pays 6.2%. Ethereum right now, I think, is 5.5%. All these rates are available. They're all public information. You can see them on our website, or you can just download the app and see it inside the app. They do change sometimes, like sometimes they go up, sometimes they go down based on supply and demand. Again, these are all best efforts. So we don't promise a rate forever. We're just promising it for 1 week at a time. But okay, we've been doing this for 4 years. These are average rates for the last 4 years.
Excellent. And lastly, a last piece of advice to the youngsters or to the others who wish to get into the space of cryptocurrency and crypto assets and investments, what would you recommend them?
Yeah, so I see a lot of young people complain that, they don't have opportunity, that all of the good things are already taken by rich people or by famous people or whatever. And here, the blockchain is a perfect example where most of the development, most of the innovation is going to be created by young people, right? So if you have any skills, you don't have to be a supercomputer programmer. You just need to have an original idea of how to create value on the blockchain. You can program, you can create that program, launch it on the blockchain, and immediately, again, millions of people are going to join you and try it. If it's good for them, they will continue using it. If it's not good for them, then your project will fail. But you don't have that similar opportunity in the banking system. You cannot, it's almost impossible to start a new bank or start a fintech company unless you can raise a few $100 million. Here in crypto, especially on Ethereum, routinely 2 or 3 people get together, create a new protocol, and almost immediately get huge amounts of users to try it out and then improve on it and so on. So that's really what's so unique, and it's a global opportunity. It doesn't matter if you're in Sudan or if you're in Egypt or if you're in Israel or in Asia or anywhere else. Everybody has exactly the same access and the same opportunity.
Perfect. All right, Alex, thank you very much for your time. And to all the attendees, Mr. Alex just landed from the airport and he rushed home, and he definitely made a successful presentation for us. Thank you, Alex, for your time, and hope to catch you next week in Qatar, FinTech.
Thanks for having me.